Two banks recently put out their respective Q2 updates. I'm talking about HDFC Bank and Indusind Bank. Now, investors have been stressing on the importance of a strong liability franchise given the current macroeconomic environment, and that only banks that have A, raised sufficient capital, and B, have a strong deposit or liability franchise are likely to be able to fuel credit growth for their customers going forward. So for both these banks I'm now going to talk of, this particular issue does not seem to be an issue at all. And in fact, if anything, they seem to be heavily advantaged given the Q2 update that we've just read from both of them. So let's walk you through the numbers, right? HDFC Bank has grown its advances at 16% on a YoY basis. So while other banks are all struggling to grow credit, HDFC is able to grow it in double digits in the high teens. On the Q-on-Q basis, 3%, but that's encouraging because the annual jump has already been factored in. So the fact that there's a quarterly growth as well of 3% is very encouraging. HDFC's advances now stand at around 10 lakh 3,700 crores. So it's no small figure, and it's up from around 8 lakh 9,700 crore last year. Now, if you want to look at the deposits, the liability franchise I was just mentioning, that's grown even larger for HDFC. They now garner around 12 lakh crore worth of deposits, and that's grown 20% YoY. And again, even here, the trend is not just an annual jump, sequentially as well, which means the exact same point last year, we're up. And last quarter as well, we're up 3%. So that's a fairly encouraging number. And as a result of all this, HDFC's CASA ratio has actually grown by 200 bips, actually more than that, to 42% versus 39.3%. So that's something to take note of. Now, similar trends were witnessed at an Indusind Bank, which had very strong advances growth as well. Again, here advances came in at over 2 lakh crore versus last year's 1 lakh 97, so 2%. Deposits, however, have grown 10% and also come in at 2 lakh 28,000 crore versus last year's 2 lakh 7,000 crore odd. So that's a 10% jump in deposits. Let's remember, for Indusind, investors were very worried about a deposit run that had occurred earlier. So this seems to be completely negating that effect, and that's why your stock is reacting very positively today. What's particularly heartening to know is that your SME and retail deposits have come in at 75,000 crore versus 67,000 crore QoQ. So that's particularly encouraging that that particular segment has grown more than 12 to 14%. The CASA ratio here as well stands at a very healthy 40.4%. Although slight moderation from last year's 41.4%. So if you hear what Rakesh Jhunjhunwala recently had to say, or what any other prominent investors had to say, banks that have raised capital, which both these banks have now done, Indusind via QIP, HDFC Bank doesn't really need to raise capital. They're well supported to grow. Now the deposit franchise growing in double digits, which is what something not many people were anticipating as another major catalyst for both these stocks.